So in yet another step in what I like to call Bitcoin's road to boring, earlier today, Fidelity Investments announced that later this year, individuals who manage their 401k retirement accounts through the firm will be able to invest directly into Bitcoin. That's not futures that we're talking about like ETFs, but actual Bitcoin that's going to be custodied by apparently a Fidelity platform, which is a big deal kind of in and of itself, but goes a little bit under the radar, I think, in this story. So this is, again, a story that I think is actually pretty important because Fidelity holds an estimated $2.4 trillion in 401k assets as of 2 years ago. So, again, like as we get towards this, hey, Bitcoin is something that is boring enough, you'd put it in your retirement account, and you have a big company like this coming on board. This feels to me like the first, not the last one of these stories we're going to be talking about. What do you think, Will?
Really interesting story. For as much as Bitcoin is boring, this is important. So do take note of it. Maybe we should have started off the show because this is actually actual real news and information. But we save the boring and good stuff for last here on the Hash. So always stick around. Fidelity has been in the Bitcoin game for quite a while. They had Nick Carter, the Fidelity gang is what it's known as. There's a bunch of them, Amanda Fabiano's out there. There's a bunch of ex-Fidelity folk who moved into Bitcoin mainstream, whether doing VC work or mining or working on the data side. It's all there. Fidelity got there first with a lot of this Bitcoin stuff. And I think that's why you see them being more comfortable with rolling out a product like this, because they did the time. They did the time on the R&D side a few years ago, and now they're ready to do it. The thing that gets interesting for me is seeing where Fidelity, as a giant player in the space, starts matching up against some of the other incumbents within the crypto space. So I'm talking about the Coinbases of the world, the NYDIGs of the world, the same sort of financial folk who are trying to build similar projects, similar applications for people who want to have boring money in their bank account. They want to add Bitcoin in there and just let it sit, let it accumulate interest. And there's going to be a rush pretty soon here, if not already happening, for these products to go live and for them to start grabbing customers and bring them into their accounts. And I think Fidelity getting in there with how large an asset manager it already is spells trouble for a lot of the bigger players in the crypto space, like your Coinbases and like your NYDIGs. I don't think its game is lost by any means, but you're going to have to see some step up in competition, some sort of new incentives to get people into the game, into these crypto incumbents that are very new to the traditional world, that are new to people who have no idea what crypto is about. But Jen, let's hear your take.
Yeah, I thought this was a great story as well. We probably should have started the show off with this story. I think it's a great way for investors to gain exposure to Bitcoin who maybe are feeling a little apprehensive about, going to an exchange. I love that they're creating educational material for their investors. I think the type of person who is going to opt for this would need that educational material because that's where the barrier lies. So I like that they're making it very comfortable for people to play in the space, even though for us, it sounds kind of boring. What I took away from the story was that just last month, the US Labor Department warned against holding crypto in 401ks. And I know we always talk about regulation and how it's slowing down innovation, but this was such a good sign for me to see that last month there was this warning and Fidelity still launched the product this month with no mention of that, and they're moving full steam ahead. And so I think it's just a really positive sign for crypto and Bitcoin. I'll pass it back to you, Adam.
Yeah, so we talk about Bitcoin as a sort of quasi-inflation hedge, and I always like to correct people whenever I can to say that it's not actually a short-term inflation hedge, it's a systemic disruption hedge. It's an alternative that in a world that is looking beyond the US dollar as the global reserve currency, well, you're going to have to pick something else because we need to have a common form of value that we can measure and effectively do global trade in. Without something like Bitcoin, you're basically looking at picking a regional currency, a Russian, Chinese, type of currency union, or maybe something that winds up having different sort of reserves in different parts of the world. And the reason why that happens is because when you have a reserve currency system, if there's a country that issues that reserve currency, as the US currently does, then it offers pretty incredible advantages that throughout the course of history, which goes back many hundreds of years, we have yet to see go without being abused at some point in time. And so Bitcoin offers something of an alternative to that. So from that perspective, it's, again, not surprising to see the US government saying, actually, this is definitely a thing you don't want to hold for the long term, while at the same time seeing a firm that's charged with giving clients advice on what is a good long-term bet, saying, hey, this is actually something that if you wanted to put it into your retirement account, well, it's just as good as all these other things that we've got here. And from my perspective, that's the important part, is that, you know, the biggest sort of challenges around trying to manage an asset and your investments in an asset like Bitcoin is that there are so many wild swings that the temptation to be emotional about it and to sell when the price is going down to protect your investment, or to buy when the price is going up to make sure that you're not missing out on what could be the next big thing, but is probably just the latest incarnation of the bubble. Well, sometimes it's nice to have that friction. The people who I know in this space who have made the absolute most money off of crypto have done it by going to India and being offline for 9 months, during which time they would have sold had they, you know, been present, but by nature of being, you know, gone. So I like to call this the coma strategy, right? The best thing that you can do with an investment in Bitcoin, if you look back historically, is you just act like you're in a coma and don't even know that the thing exists until you get to, you know, somewhere that's like 100 times or 1,000 times greater than your investment. When really, if you were paying attention to it, you would have sold it at 10 to 50, right? So again, like, I think it's actually really important. I think it's a good move on Fidelity's part. I think there's a lot of demand. We've heard a lot of demand to put this sort of asset into 401ks, and people do it through unconventional methods now. And to the earlier comment, I actually don't think this impacts Coinbase much. I think, again, Coinbase is nicely positioned to be the de facto option for a lot of this stuff. They have some problems. You know, there are some challenges. Like, I'm still waiting to have a company you know, get reviewed for a new corporate account almost a month after I put in the application. So again, like, there are ways that I'd like them to improve, but at the same time, it's Coinbase's game to lose at this point. And Fidelity doing this just further mainstreams the concept and takes us towards Bitcoin being boring.